Hello everyone, and welcome back to our market deep dive. If you looked at your portfolio on Friday, you know the bears aren't just knocking, they've broken the door down. The Nifty 50 has officially slipped below the 23,000 mark, closing at 22,819. But as we head into Monday, March 30th, the question on every trader's mind is there more pain ahead, or is this the ultimate buy the dip opportunity? Today, we break down the record-breaking FII sell-off and the geopolitical storm brewing in the Middle East. First, let's look at the hard numbers. The Nifty didn't just fall, it crashed by over 2% in a single session, wiped out 3.65 lakh crore in market wealth. This marks the fifth consecutive weekly loss, the longest losing streak we've seen since August 2025. Adding fuel to the fire, the Gift Nifty is currently signaling another gap-down opening, trading nearly 60 points below Friday's close. Global markets are in a tailspin, with the Dow Jones and S&P 500 shedding over 1.6% as investors flee riskier assets. The elephant in the room is the escalating Iran-US-Israel conflict. This isn't just a political headline, it's a direct hit to India's macro stability. Crude oil prices are surging, and for a nation that imports over 80% of its oil, this is a nightmare scenario. Higher oil means a wider trade deficit and rising inflation. Consequently, the Indian rupee has collapsed to a record low of nearly 95 per dollar. This has triggered a historic exodus. FIIs have pulled out over 1.14 lakh crore rupees this month. Let that sink in. This is the highest monthly sell-off in the history of the Indian capital markets, surpassing even the panic of October 2024. Foreign investors are moving their money back to the safety of US bonds, leaving Indian equities vulnerable. Technically, the Nifty has formed a massive bearish candle. The immediate floor is now at the 22,600 to 22,650 zone. If we break that on Monday, the next stop is 22,400. On the upside, 23,000 has now turned from a support into a formidable wall of resistance. Our stance for tomorrow's opening? Strongly bearish. This is not the time for aggressive bottom fishing. The sell-on rallies theme is dominant. Watch the 22,600 level closely. If it holds, we might see a dead cat bounce, but until geopolitical tensions cool and the rupee stabilizes, the path of least resistance remains down. Stay cautious, keep your stop losses tight, and remember, cash is also a position in a volatile market. Subscribe for more real-time updates.